Hi Naveen, how are you?
Hi, Prem. Good. I'm good. Thank you.
So what you did last weekend?
You have started recording, right?
Yes, we are
Okay.
recording.
I forgot. It's difficult to recall. I'm
You are a busy guy.
35 years old. No, fine.
And you have also gone through few of the stocks and you are coming up with some analysis today, right?
Yes, yes, yeah.
Okay.
It was about, I start to go through the budget paint also. Paint sector, I have idea what is the latest things are happening. But budget paints, I will talk in the, let's discuss in the next week maybe.
Mm-hmm.
So, something. Modern management system, right? So, business, I think you would have already gone through technical things and you would have shortlisted that, right? The fundamentals and based on the recent performance, yes, that was looking interesting. So, screener, I have gone through that. The EPS is increasing. Maybe parallelly you can open the screener.com and
Okay.
the same. Based on how you shortlisted this company.
Um,
Based on those parameters only, right?
Also,
Okay,
yeah,
yeah.
with that parameter, but also these are in my watch list for some time. And
Okay.
I already have taken some notes before that I wanted to enter in these stocks, but there was never a time when I was being able to buy this. And
Okay.
what also I understood while learning about it is that they are the market leader
Yes.
and they do have, uh,
They have around 70% of all these.
yes,
They are handling the main
yeah,
the top 15 AMCs, right?
yeah.
So out of top 15, the 10 AMCs are their clients, and also out of 40, they have around 70% of the market share. They have the competition.
Mm-hmm,
See, the competition the cave in technologies, and I will go through that competition, maybe competitors.
mm-hmm,
But recently, if you heard, Reliance has made the partner, really Geo Finance
mm-hmm,
has done the partnership with the BlackRock, right, to
mm-hmm.
launch the
AMC.
yeah,
Yeah.
and also they have uh, uh, two other companies are entering into the mutual funds. So CAMS is the service provider for them.
Okay.
Three new. I mean, basically they got three new clients as well. Fundamentals, right?
Mm-hmm.
Uh, kind of duopoly or triopoly. Not duopoly, we cannot call it as duopoly because two competitors, we have three competitors, but market leader, I can say. And shareholding side, no promoters, but F2s and
Yeah.
F2s are handling everything,
Yeah.
most of the thing.
No, I think the reason,
Mainly LIC.
yeah, but the reason not to have promoter is not because it's a bad thing for it. It's mostly because the same number of people who were in FII are actually been now owning it. So a lot of times in screener, those people who are treated as promoter, if they are financial firm, then they will be taken also as FII later.
Uh-huh.
So that could be one of the major reason that someone FII would have entered in it. And as per even I understood, they are the market leader and they do have all the different edges compared to other. So the moat is there for the company. And
Yeah.
as per even I understood is that the business of mutual funds and also the business where we are going to see people doing SIPs, new investment. I don't see that is going to slow down. I think uh, the
For our scenario, right, when we are looking for the downtrend, so when the downtrend happens, definitely people will shy for investing. If you see last 2 to 3 months, right, if you see the report, people already stopped some of the SIPs.
SIPs. Yeah,
not major, but I mean, I'm not talking about the higher side.
yeah.
Uh, but so that's why people lose interest here.
Mm-hmm.
See, that's what happening, right? Market is correcting now, and people think that uh, the investors do not invest in the mutual funds for some time,
Mm-hmm.
and that's why they are taking out of money out of this stock, right?
Mm-hmm.
They think that when the people take money out of mutual funds, definitely it will impact the performance of the profit of the camp
Yeah.
because it's directly proportional, right?
Yeah.
So that's why investors are thinking and they're taking out of money. But once the markets, I mean, everything settles,
Mm-hmm.
we may see bound and find some good percentage out of this one.
True. That's right.
Yeah.
Um, yeah, so let me also open the other view um, of this. I have a fundamental view where I used to see it.
Oh,
So in one view, I will be able to know if how's the fundamental are and how's the company performing. So yes, I was actually one of those guy who actually purchased in right time, but then I sold it, um, and I was literally not right doing so. And then I purchased again at a very high price. So I was not always the right. That's also one of the reason that I actually think that this is one of those company which can perform better because if you even see in past, I had a feeling that these kind of company may not be able to sustain the growth percentage. If you see this particular part, the increase in EPS was decreasing, which mean that the company growth was there, but it is not increasing. But soon after I sold it, the growth also comes. So I think the good part about this company is that it has a very good, strong support for the EPS growth. And at the
so when
moment,
you sold,
I
what
sold
date?
it. I sold it when it was 2,800.
23 is it? Hold on.
Mhm. Yeah, yeah, yeah.
2023
And
June.
I had it somewhere in 2020. I don't know when. And also one of the thing about this company was that um, I was unable to understand the ROE fluctuation. So even if you see that moment, the moment when I sell it, the ROE was the less. I mean, the company usually should have consistent return of investment. It should not be so low, but somehow it was low. But then it cope it pretty well, and I'm not pretty sure about it why that happened. Maybe there are some news around it to support that argument. But during that phase, I just came out of it. But the market was smart enough to go ahead and they forecasted the earning before the price itself was showing it. So yeah, it doesn't really comes down then. So it also mean what you are saying is that since now the EPS is top, maybe the coming month when we are going to have the result of the March quarter, we'll be able to know if the EPS is good. So do we have the earning report for March already? No, right?
No, not yet. No, no, not started.
Not started. I also don't think that we.
Start in January,
Yes.
February, March, right?
Yes.
Start from April second week.
Yeah, not you. Exactly.
Yeah.
But I have a fear that this quarter it will be last quarter it will be really bad. That's why also what the performance look like.
Quarter might be bit slower. Jan, Feb, March. There was volatile, right?
Mm-hmm.
People might pause their fixed
Yeah,
SFH for a while.
yeah,
Might be.
possibly. No, no, whatever you are saying, I agree to that. And Are they only in AMCs or yeah? I
No, no, they have 6 to 7 different of even they have business with insurance companies as well.
mm-hmm,
One thing is mutual funds, so they will hold this one buying, selling, and all the details, right?
mm-hmm,
Which are the broker names that we put in. We are using Zerodha. Basically, we put the sell order, buy order, those details and all. They will take care.
yeah, yeah,
Comes.
yeah,
That is one. And they are the KYCs. They are doing KYCs for all these insurance things. And they have one portal where all your insurance details in a centralized place.
yeah,
6 to 7 tools they are having.
yeah,
Fine. Revenue is from the mutual funds.
yeah. And the SIPs of mutual fund actually.
Yes, yes.
Um, so there are two type of thing we are talking. One, opening of a account which require KYCs, and second, sustaining a particular mutual fund and keep buying the SIPs, which also involve their participation.
Yeah.
So I think opening or doing KYC is limited is because yeah, as you see also here, it is limited is because for example in India, if you say there are 10 crore people who have demat accounts, maybe in 1 year the count can be 1 crore, extra 1 crore, but not less than or not more than that, right? But those who already have accounts, they may sustain what they're doing.
Mm.
So the ecosystem that has been created, it can actually drive the company like CAMS, and there are more competitor as we know, but somehow CAM is the market leader. So even I believe that these kind of companies are good. Oh, it has no debt. Did you check the debt for this company?
No,
Yeah, 1 second.
borrowing zero. Borrowing they have borrowed something. No, it will be tough.
Yeah, I also have here debt to equity. Yeah, it is almost zero.
Recently they have taken. Recently scroll down. It was zero. Recent 1 or 2 years back they have taken. Next one. One more. Balance sheet. 79 crores. September 2021.
Yeah.
Maybe from Corona they started. But why do they want to take the loans out?
Oh well, they wanted to expand maybe.
Okay, new services and okay, technology. They have to invest in the new DB and all no servers.
Could be. But
Mm.
the good part about their business is that it is keep growing. And if we compare it like 10 years ago, then it is like 4 times the business itself. Um, and the profit wise, it is also like 7 times in 10 years. So yeah, this is a company which can be trusted. Hmm, interesting. But when we are talking about CAMs, there are other options, right? Like BSc, MSc,
CDS.
CDSL. Yes,
Yeah, how about CDS?
or IEX. Actually, all this. Kefin technology was,
Same competitor for this.
yeah,
Same technology mainly looks after IPOs. One of the their service
okay.
IPO.
See, if we compare, then CAMS is one of the least PE company, which means that the demand of CAMS is lesser than BSc or CDSL, at least now. Plus, it is smaller than the top three companies, and it has some reasonable debt, but in 18,000 crore 78 is almost null. I don't count that. And if we compare the ROE and ROCE, then the return of investment is much better than others. So in that case, it is better. But that also is something we have to check in the result, the March result, because as I said, right, when I exited, that moment the ROE was somewhere less than 10. So I have a feeling
Mm.
that these ROE are highly fluctuative in nature, It is not like you are doing an iron ore business and every quarter you know how much iron ore comes out of the land or how much refinery is coming for oil, right? So all those things
Mm.
are pretty much standalone, but these businesses are very, very risky, and it can have. I mean, we cannot make decision based on ROE until we don't see a history of how ROE behaves. Um,
Mm.
the prop,
Mainly depends on the market, right? You cannot forecast.
yes, yes, we cannot. But the good part about these companies are that we know that when financial awareness will grow, the more participation will happen, then these companies are bound to grow.
Mm.
So um, even if you see here, and if I make this also weekly, just to be precise about the EPS growth, see, the EPS is continuously growing every year, right? And there are more people who are maybe coming in, and so there may be 1 year of time in between where the camps can make some slow growth, but thereafter I also believe that this can go up. Plus it is at a good level, right? So if we say that we wanted to look for a stock which is having a good business and a reasonable pricing, then I think this is one of those companies.
Correct. Mm.
We can see that. So from the top, it has corrected about 30%, and
Okay.
30% is, yeah, 30% is fine. And if
It
we,
peak, is it the peak, the only peak, or we have other than that?
no, this is the only peak.
Okay.
This has been listed after Corona period, and if you see the Fibonacci, then it is around 38%, which is like okay, it is uh, it is still a strong stock. And
Yeah.
if I have to compare it against the last bull which has happened, then it is at 0.78. Yeah. Yeah. I mean, I think there's nothing bad in this company. We can definitely can think about this company. Only thing is pricing. Are we, because if assuming the March result comes really bad, then the price will go down. So I think
Mm.
we should put a a watch on the result for it, and if it falls more, then we should think about entry. And
No, during the downfall, I think it's better to invest on this one because the reason is uh, once everything settles down, once the market goes up trend, right? People definitely start this SIPs.
mhm,
You go physically
yeah,
after downtrend, they consider everything because IPOs also everything now stopped, right? Why? Because because of fears, right? I mean,
yeah,
nobody are going to invest now. So definitely the same thing will be in the mutual funds as well. So once everything is, I mean, everything is going in the good shape, everybody restart the SIPs.
yeah.
On the quarter after quarter after quarter, maybe it's 1 or 2 years, 1 or 2 quarters. So the profit might be increased. It might take it time, like 3 months or 6 months. Definitely, it will rebound the stock.
Yeah. Um, so, so okay, so we have two theory here, right? One,
Mhm.
in economy, there will be more problem, and because of which people will have less money in hand. So they will either stop SIP or they will at least stop aggressive buying, which actually
Mhm.
decreases the earning for camps. And we believe that. So if that's going to happen, we are saying for about 2 years or 1 years, this is going to happen. This will going to continue. So in 1 or 2 year, if we have a plan that the cam will then start going to make money after a year, in that case, the price that we see here will not be the price from which it will take a bounce. Like if you see here, the bounce were somewhere at 2000, but it was falling from like 1 year before it actually make a base. So even for us,
Based on the reference from the current.
yeah, we can take a base from anywhere, but yeah, but for now, I think it is not really a price that we should buy. Um, we should track it maybe, and we have to. I mean, if I have a choice to think about it, then I will say that I will let it fall. I will not stop. I will not believe when it will stop. I will believe it will fall until something good doesn't happen in economy, or at least some glimpse of good happening doesn't appears. And in both the cases, it need to go up. You know, so if it is falling down like this, it is fine. We're not going to buy. We're only going to buy when we see a base and when it actually goes above 23%.
Mm-hmm.
Okay, that's what I'm actually thinking, and I keep thinking it actually from past few days, because if we want to do a diving on when the base has been made, then there is no way to find it out. Even here, if you see, it look like it has make a base, then it comes down. So maybe the first part of your installment of money will go here, and second part will go here, which is fine. It is not, I mean, either time wise it is not so big, neither it is price wise so bad, right? Same for it. Let it go down. If it crosses 3,000 below, let it wait. If it comes to 2,500, then I believe that that is a moment when the base should be ready, because in no case, in no reason, these kind of companies should go till its last low. I mean, there must be something really, really bad for that to happen. And I don't want that to happen. Neither I believe in it. So I believe somewhere at 2,500, we may think about it to buy. And if it doesn't fall till this much amount, if it take a bounce from here, it goes up, then we are going to make another Fibonacci that moment, and we are going to say that okay, it falls till 2,600. So when it goes above 3,300, then we will buy. So until this doesn't really make a base, we will not buy. See, if you see here, it goes, if you believe this is the base, then it goes up when it's falling down now, right? So if it goes from this point to up, then we can think about buying. But until 23% is not properly defended, we will not believe this has been done. And this is a new point I wanted to add also in our learning. You tell me any other stock, maybe CDSL. I mean, we can check the competitors, right? See,
Yeah.
yeah, you have similar chart, I believe. Um, yeah, a lot similar. So see here, it okay, it started somewhere in 2017. It was falling down. Okay, now how I would know when the base has been made? If I start, okay, assuming this is the point I believe the base has been made. Okay, but then you see it never crosses 23, which means that I got no entry, right? I mean, I believe this is the base, but there's no entry for me. Then I see, okay, what is the next one? So the next one is this point, right? This also does not have 23%, goes up. Then I go to next point, and here you see after some time you see a base is being made and it's trying to go up. We can make an entry here. Okay, then it comes down, which is fine, completely fine. Okay, because we anyway have to put 3 installment. That's the plan, right? If you see properly, I make 3 check boxes. So if you enter here,
This is three installments, is it?
yes,
I thought the selection of the one, two, three priority. I thought it is a
no, 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 no.
okay.
I wanted to also track how much time we do it. If you want to do it 5, we can do 5, but I believe 3 is fine.
Yeah, max four is fine because 5 times tracking is defeat.
Yes, so whichever number.
See, tracking we have to do.
Yes, no, but anyway, it is very subjective choice, I believe. But in the end, I think 3 is good enough to start with. So if we say we buy here and then the second opportunity we get it somewhere here, and if we buy here, it's fine. It's completely fine. Normally, this logic doesn't fail. And the third one, if you ask me, I make a mind, I will buy at 78%. Okay, I will tell you why. So what I'm saying, first at when it actually convincingly break 23, which is here. Second, when it's again comes to your buying price, which is here. And third, when it breaks 78%. So while doing so, actually, I'm going to make my investment um, in between somewhere here, right? This will be then my base price. But my point here is that when a stock actually cross 78%, then it will not come down in the logic which I'm talking about. Okay, we can see more charts for sure, but that's my all logic. And I don't wanted to stick to those stocks which is keep revolving in this area, never going up. We wanted to say that we were going to put money on it when it actually proves that it is going up. Okay, let's see some other stock, for example, because I think that will add more value. There were more competitors, right? BSC. Let's see. Yeah, BSC is a fantastic chart to say. Okay, so it started from here, and I don't know how the chart behaves. So let's go and make this as a base. Just we are making a base 2020. Okay, then it
Mm.
goes up. So you bought it here first, right? This is the first installment. Second installment, you are waiting to comes down here. It never comes down because there is no reason to come down. If you wanted to put in another way, um, you put it here. Okay, this is the base. This flow falls. So this is not the moment when you do investment. So that is failed. This is the base. No. This is the base. No. This is the base. Actually, no, because it actually comes down. So this is the first moment when the base has been made, and then you see it's going up, right? So this is the first installment. Now there's no way to make second installment. And third installment, I want to do somewhere here. So my point is, if a stock actually crosses here, and if you get no opportunity down, then you actually or we actually have no way to make a rule that we are going to add up. We will just going to have one installment. We will miss everything, the whole rally which is going to happen.
Mm.
So I
Got your point.
so I
The
want to,
last time
yeah.
when just last time we discussed that we will buy another one left side, but now you're telling all the three or four chunks on the right side only. When the market starts correcting, I mean market starts upward journey.
Yes,
Okay.
yes. Once you put a dot as a base, see the right side of it.
Um,
Okay, so this is a new learning even for me. But even if you do so, then you say you entered here first, then you get no chance. Point two, I'm not sure when you will do it, but at least if you do one at 78%, it is going up, then this will not come down. Let's see another chart. Um, MCE, what is it? MCX, right? MCX.
okay.
Okay, let's go in the starting. Let's see how it's okay. Started 2012. This is fine. Let's take this one. This is a bigger one. So first entry here makes sense. 863.
Mm.
Second entry, I said above 78. Does it went up? No. Does it went up? No. It actually comes down. So I'm waiting. So see, just see the benefit. We are not putting all the money and we are waiting for years. We put one money which is also at a very good level from the price you are in. So if you are not happy with this stock anyway, you can anyway sell it and you still make profit like double time, right? 90% is double. But you are not entering your second chunks until you're getting the right price, which is 78%. So or 78 or the price that you believe is the base, which is this one, 254. Neither is coming. Then third time again it fails, and fourth time at 1393 it goes up. Do you know what happened then? It actually goes up here till 2000. So if we say how it behave, you enter here, then you enter here, and then after second entry, it again comes down, but then it goes up. So when you see the future, you believe that your decision of putting money here and here are the best choice you can ever make, because you actually save all the time with your money, plus you are waiting for a clear direction what to do, and then you just make the money, right? So my whole point here is that um, I don't want to know when the base has been made. We will wait for the base to be made, but we will use some simple logic. So with that logic, if you saying cams, so need to make a base and then only it will go up. Even if you see here, right? I mean, let's use the same logic here. So okay, use the same logic here. So this is the low. This is. Do you think the base has been made? I don't think this is not the base. I mean, ideally we will see the price, but this is not exact actually crossing 23%. It is like going up, coming down, and then making an evening star. So you are actually not making or putting any money here. We are discussing, but we're not putting it. Uh, and when you see a new base again, and then you see here going up, coming down, going up, coming down, and this convincingly goes up. So when this channel has been made, in between you will buy it somewhere in between of 23 and 38. First entry, second entry at 78, which is here, right? And third entry anyway. Ideally, if we say, then we are waiting somewhere either here. Yeah, I have not think about third entry yet. Even in this case, because we got two opportunities and it went up, but it doesn't really. So even if we say that we wanted to sell it, so the
Yeah.
average price is here, because we bought here and we bought here, so the average price is here. So as if you remember, I told you the logic, right? That we will sell it at 1.6. So it was about 70%. So it is also fine. So if we wanted to not really put a lot of brain, we can actually just use this correction period and make some 70% out of it. And but if we wanted to hold, and if we believe it will going to perform like MCX or BSC or CDSL, then we already enter here, we already enter here, and now the third one I have to discuss. I have to check when should I, or when should I I believe that it's going up again. I'm unable to identify that point. So the point that I identify at the moment is somewhere here, and if it comes down again, then, and third is when it goes up at 78. But there's a possibility that it will not come down. So in short, we have three chances to put money in a stock. Two chances are clear, and three chances if it make double bottom or something like that. But if it doesn't really do it and if goes above, then we have to see. Maybe we cannot make three installment, then we then have
Mm.
to stick with two installment only, which is not a bad thing. Let's see IEX, because we are talking that we put money but not all the money, which is fine. I want a stock which has a bigger chart, you know. Oh, this is a complicated chart. Let's put our logic here. So this is the high, this is the low. Okay, okay. Does it fails anywhere? No, no. It doesn't fail much. So this is the point when we say 23% has been crossed and it goes up. So we enter somewhere here between 23 and 38, right? First entry. Second entry, I told you to enter at 78. So it also entered here. Okay. Third entry, if it comes down to 23%, which is here. So ideally, somewhere between here to here, we can put a buy call. It is a difficult call to make, but assuming we make it, so we put our money here, here, and here, and then the stock goes up. So this is the best case. Whatever we're discussing is the best case. Yeah, we need to also come up with a logic of stop loss, like when I mean, if we have to put a stop loss, that's the question. But in most of the chart, this logic works. Let's see some chart which is really big, like Infi. Can we put this logic in Infi? So you tell me a point. I will put my points there. Just tell me a point. Maybe monthly.
But there only, na?
Here?
Peak.
Yeah. This is 2000. This is dot com bubble. So, okay. Yeah. Okay. One more thing. Changing charts from weekly to monthly to daily make no difference in Fibonacci. That's the greatest part. All other indicator will behave differently, but not the Fibonacci. It always behave the same because this is the levels, not indicator based. Okay. Anyway, so yeah. So we just first try to see if this is the low. This is not the low. It has broken down. This is the low. This is not the low. This is the low. So it tries to goes up, but then it doesn't really goes up, right? It actually stop at 23. So we look for this price, but we do not enter because it never satisfied the price. This is the moment at 86. So after 2001, we entered at 2004, 2003 December, which is a good thing. Then second entry, as I told, 78%. So somewhere here, 191. First entry somewhere at 88. Second entry somewhere at 194. Okay. So third entry, I don't know. But in this chart, we never get an opportunity to put the third entry because then it goes up completely, right? So if you see now, we entered here and then we entered here. And if you see from time perspective, if you see 20 years back what you did, you will feel like you entered in the right moment because that moment, even the prices were supporting, the trend was on your side, plus you purchased in a right price, a right stock. So perfect, no problem. So now two question remains. Okay. First, will you put 100% allocation, not 100%, 33% allocation at each point? Or second, if you get only two chances, are you okay to lose the third chance? Maybe we have to come up with a theory. Um, and I'm still not aware how to do it. Um, but assuming uh, we have three attempts, right? At first, we put 40%, okay, which is 23. Second, we put 40%, which is 78 plus. Yeah, let's use plus because it need to convincingly cross it. Yeah. And third is 23 again. I'm just trying to, oh, sorry, 20%, which is 23 again. And this is anyway 0 point, right? So 0 point. This is one way because we are then saying even if you don't get the third opportunity, the first two put 80% of your money, which is fine. So it is not like you're sitting with 50% of your money in your hand. You already got opportunity, you put 80%. 20% is for a moment like Corona, you know. If something happened, then you wanted to enter, then maybe we can use this money. That is one approach. But this is for those candles where it doesn't really come back. But there can be other opportunities where it can come back, right? Because the chart may not go completely high. In that case, this will be here and this will be here. You understand this?
Okay, in case it goes minus
Yes.
that point,
Yes.
point,
Yes.
it goes minus, okay.
Yeah, but in that case, it should be again this way.
Hmm.
So what I'm thinking, if we say it is coming down it means that either the low has been not been made, and I'm thinking, and I'm really wrong. Uh,
Mm,
but if it goes this, then we will buy it. But then where is the stop loss? Because if we do not have a stop loss, it's also a bad thing. There may be possibility that it will break this and it will go down, like um, in this bank. Oh, before that, I need to remove this from the chart. In this bank. Okay, this is a good chart, but I wanted to discuss something here. Okay, base, see here. We believe, okay, weekly chart so that we see properly, right? Here, see, it comes down, it goes up, right? So first entry here, second entry you don't get it, but first entry you make it. Second entry where you will make it as per the logic I said here. So two entries are made here and here, and then stop falls. So if you have no stop loss, your 60% money will become 30%, or maybe less than that. It is 1400 to 200. So your 60% become 10%. So this idea is not foolproof. That's my point. Without a stop loss. Um, Second is that we can say we will never going to put 23% again until it doesn't touch 78%. You know what I'm saying? I'm saying never put
okay.
this one or this one at all. We will find some other logic where we can put this, you know? This is more
No,
like
no, no.
this is more like reserve. This is more like reserve.
Okay.
And I don't know how to use this. But yeah. So when I say reserve, I mean don't put it. And I don't know the
Yeah,
value at the moment. So 40% is at risk, right?
but there should be a stop loss because there will be other opportunities, right?
Yes.
When you have a lot of stock,
Yes.
maybe we can exit
Yes. Exactly.
one or two at least
Yes.
things, right?
Mm.
Simply you will not exit all the
Yes. True.
maybe okay, exit from 4 or 5, something like that. First
Yeah.
one.
Mm.
This one feels that okay, it can go all right. That one will keep a stop loss.
Yes. True. No. Also, the good part till now is that since the first 40% is been invested, and the second 20% is not invested, and third 40% is never appeared. So your money that you have invested is only 40%. So if you
Correct.
want to make a stop loss, it is not so painful. It's like if you have 100 rupees, you only put 40 rupees anyway. So even if you cut the money somewhere here, it is fine. It is not so bad, you know. So it is better for us that we do not really put all the chunks, and we took the loss on our first investment anyway, which is great. So you planned well. It doesn't really exited the same way. Plus, when we took a stock, when we make a position, we anyway need to follow the charts and need to follow the news, what's happening. I mean, if I bought it here and if I'm seeing the candles like this, I anyway should ask myself what is happening, right? I mean, this is not the great chart. I believe it to go to 78, but it actually comes down like this. And one more thing, whenever a chart comes from 61% down and it doesn't really go to 78 again very soon, not very soon, like within few weeks, within few months, it means that it will not go early to that point. So there will be a time wise correction. So it may not fall like this, but it can actually make you stuck here for years. So anyway, maybe we will not wait here to exit. We can exit in between in that case. But in this case, assuming you never enter here, you enter here, then also you are stuck. If you enter here, if you are smart enough, and if you see this, you enter here 726. See here 726 you enter, 718, and then the second chunk does not get executed because it got rejected from there. And believe me, when you already have a loss here and when you see 70% getting rejected here, you will never going to re-enter in this stock because this stock is not following our greater plan, which also mean that this stock is not good for us. It may be great, but it's not good for us, right? So in this case, the way of dealing with this stock is different. You can see here, I written here, could be 3x from here because, and when I written it was somewhere at 400 because I believe that the way it has fallen down, it can actually go up pretty quickly. But the way these stocks are doing, it means that it is not an investment stock, it is more like a trading stock. You find something here, you enter, and then you sell something above. That's it. Similar example, Yes Bank. I'm just trying to find all Doom's example so that we know how, how it can be for us. This one. Yeah, this also captured and then it comes down. Yes, we have almost no way to avoid this on these kind of stocks. So we need to have a stop loss. If you ask me when to have a stop loss, um, yeah, it depends. But do you want to have a stop loss in the 15 stock or you want you also want, right? Yeah, I also want to have
Couldn't you ask her, do you want to stop loss or leave it or let it fall further?
yeah, I mean
Yeah,
not only
yeah.
that, but but it,
Last in one of our previous call you mentioned, if you leave without stop loss, then you are like a long-term investor. We can not think of that. I
yeah,
remember that.
yeah, exactly. So technically speaking, um,
No, see, the one which you said that really makes sense in between these two stocks.
yeah, yeah, yeah. One second. Yeah,
Mhm.
yeah.
We might forget all these things. No? In the previous Excel sheet, um, we can see your trend, right? If it reaches to 78% and comes back and again it will not go back. Right? How do you track that? Can we make an Excel sheet with the formulas so that real time, if
Mm-hmm,
I put the value,
mm-hmm.
instead we started on 100 rupees,
Yeah,
started investing 100 rupees, we will
yeah.
put and let the formulas take itself and let it think, okay,
Hmm,
this
hmm.
amount, in this amount and exit after this one. Something like that. Maybe once we
Yeah,
maybe raising the task, let's add, yeah, somewhere. Maybe once we finish all the analysis, something like this,
I believe
we
the
get the
same.
clarity,
No, no,
right?
you are saying same. You are saying right. I believe that
Okay.
we need to have Excel for all these points so that
Mm.
we are not really worried about it. Even I do not want any trigger based buying. I want some alerts. So you can use alerting platforms like a Screener
Mm.
or Kite to at least aware you that your price has been coming so that you can make a decision. So at least when the price comes to your radar, you can at least make it to a watch list and you can then see it if it is behaving the same.
Mm.
Um, and that's a good idea. Of course, we're going to do it. I was about to say how to find a stop loss. So if we say we have 10 stock and each has 10, oh, no, oh, no, we have 20 stock, right? Yeah, I know.
Mm.
Oh,
20 is very
no, I want to have a round number for calculation.
big.
Yeah, but
So
yeah, but if you
use
are
the opportunities.
if you're tracking 45 triggers anyway, then you can track 60 triggers also.
No, no, no. It is difficult. The company said the more companies you will start analyzing, the opportunity will miss.
Exactly. Exactly. So if you choose only 15, but you have a bigger bucket of 20, and if you stick only with 15, maybe you will lose the opportunities of other five. And this is the first time. This is the first time that we are trying to make a logic. If we do not, if we try to really concentrate on a specific list, then maybe it will not work. I mean, it will work, but it will take its own time. And the problem with market is that when something runs, everything runs. You know what I'm saying? If you see any chart,
It's everything runs. Then why do we need 20?
no, everything runs in a sense like maybe your 15 are not running, but everything else is running. So once you think that your price will come and you will come out of it, by the moment the bull run is completed.
Hmm.
What I'm trying to say here is, see, actually, that's the best part. I make two columns for each of us, right? You can maintain 15, I can maintain 20. And my point is
I
that
thought I thought to put morning serial number and
no, no, no.
I
This is not for good morning, goodbye wishes. This is just to maintain different track.
the column, the first column, serial number 1 to 20, how many companies we have?
Oh, this is 50. This is this is about 50, yes. But as we said, right, this is just to filter it out. I mean, we already filtered few. So out of 50, of course, many will go away. So maybe you will stick with 15, I will stick with 20, or maybe I will stick with 25, or you stuck with 10. It's all open choices. But the main point is to make a calculation done. If we say 20 stock for simplicity, then each stock is 5%, right? Now, 40% of 5 is 2%. You with me?
Mm-hmm.
So if we put to your investment, if we put 50% stop loss, it is actually 1% of your portfolio, right? So if you are taking 20 stock, and if one of the stock hit stop loss, then you are losing 1% of your portfolio, which is fine for me. If the same calculation I do it for you, maybe separately, 10, 15. Now you are good with maths. Tell me, what will be one stock percentage will be? 1, 2, 3, 4, 5, 6, 6 point something. Let's say 7, right? So 40% of 7 is 2.8. Let's say 3, right? So 50% loss of 3% is 1.5. Yeah, somewhere. I'm just trying to give a real high level overview that one stop loss for a stock will cost 1.5%, which is a realistic stop loss either. Ideally, when you're doing something like that, 3% stop loss is also fine. And when that happen, when I think if I make it 10, then it will be 2%, right? Yeah. Let's see, third use case 10, then each is 10. 40% of 10 is 4. Oops, 4, and 50% stop loss is 2. So this is the number of stops. This is the stop loss that we have to prepare for each. So if you say out of 15, you hit 5 stop losses, then actually you are losing 7.5% of your capital. If I'm losing 5% of my capital. But the opposite is also true that if I make less. And here it is the same way. So either cases, if you ask me, either cases, we're not losing more than 1-2%, which is fine. So if you find out of 15 one yes bank, let it be. So when to exit, you entered here. 50% call is here. So I'm telling this is the worst case. Huh? You can also exit in before that. You may say, I don't believe in this stock anymore. Let me come out of it. So that's also fine. But 50% is the max loss that we can bear, not more than that. What is your opinion?
No, correct. We need somewhere stop loss.
Yeah, 50% is fine, or you wanted to have it less than 50%?
You mean consider I purchased at 100 rupees.
Mm-hmm. 100.
In 50 rupees
Yes.
comes to 50 rupees.
Yes.
For correction, okay, the first chunk we purchased and from that point it corrected 50%.
Mm-hmm. Then you sell everything. Then you sell
Actually, no,
what?
no. Before that we have to
Uh,
that properly. That we wait for 50% correction.
yeah, but that's the maximum. But that's the maximum because
Okay,
because
maybe
these
start 30 to 35% itself.
no, what I'm telling here is that if you see here, this goes up and it goes up and it goes down. It's weak candle, right? So you are actually going to put how much? February
To one stock
20.
only. How much? 212 we purchased one stock, okay?
Yes.
211 somewhere around, okay?
Yes.
It went up to 280.
Yes.
So we have to see 280 minus 140. 280 minus 140. 140. It will we have to sell around 140. That's what we are saying now. Is that correct?
50% of
Top.
no, no, not the top. We don't know the top. We just know the buying price, and from the buying price, 50%.
Mm, maybe we can calculate from the top. Maybe.
But in that case, you will miss something. I will tell you. Let me give an example. Mm-hmm.
See the good. Right? It went up to 240, 280.
Yeah, yeah, yeah. No, no. Let me show you something. No, this is not a great example. I want an example where it corrected, but it goes up again. Tata Motor. Yeah, these all are success stories. Okay, here. Oh no. Okay, I'm unable to find an example now, but let's take this example. Okay, 2015. So it goes up. We purchase now from the top. This is the top. Yeah, in this example, it comes till 35% and then it goes up. Okay. If we say 50, it's here. So this is from the top 50 and this is the buying price. So from buying price, this will be, I think, less than 50, would be somewhere like 30, somewhere 30, 35. So this is one approach. But yes, what I'm thinking at the moment is from here itself 50. And we can discuss more why. First reason is that um, anyway, we are losing 1% of our capital in this example. Second, if it actually comes down and we sell it early, there may be a reason that we lose everything. For example, this one, the below one, this example, okay? We entered, okay, we make a high and low like this, right? Okay, we never entered in this example. Yeah, and this never goes down then. Yeah, it's tough to find the stop loss companies. I mean, our logic is so good that we are unable to find bad companies. Um, and yeah, I mean, let's stick with some good example then. Um, yeah, I feel like we are not going to lose money because there will be less example like that. Adani, yeah, Adani Green. I hope we will have some stop losses. Okay, let's see if it works. Mm, hmm. Okay, survived. So we entered here, not here, here, right? And it went to 61 golden ratio. It comes down. How much it comes down? From the top, it comes 60% down. Ah, good example. So, as per your logic, I will exit at 23%. If you remember, a few moments back, we were discussing that we have to buy when it comes to 23% anyway, so that we can put our second chunks. But in this example, we are actually selling it. So we buy here and we sell here. And we both know that there's a possibility that Adani Green can actually go up from this moment. So the moment when we are selling, from that moment it can go up. But if we would have bought it here and put 50%, which is here, there's a possibility that your stop loss will not be hit. So,
See, we will not, let's not sell the before this bottom.
before this
This bottom.
bottom,
What is the lowest here? You have written with the EPS, right? With EPS.
yeah, but this is, yeah, okay. We have to come up with a number, but this is 65%.
In case, see, we will trigger the stop loss only if it comes down of this lowest. Or else whatever the percentage, let it will decrease, let it.
Um,
You got my point?
so you are saying not sell until the low is broken.
No, no. See, 452 is the lowest, right?
Mm-hmm.
452 is the lowest.
Yes.
So zero. The Fibonacci series you have added zero.
Yes.
452.65 somewhere around.
Mm-hmm.
So that is a bottom formed and it took the base. Then we are entering around 1000. What is the point? 1100 somewhere around.
1200. Yeah.
We 1150 around you entered.
Mm-hmm.
So it went to 2000. Then it is coming back, coming back. So in this Fibonacci series, if it is unless it is not breaching the zero line, right? The
Mm-hmm. Mm-hmm.
zero, the lowest stage. We will not sell. Let's not sell that.
Um, yeah. But if you then have to sell, then you are losing 65% of your 40%, which is assuming in this example it is 70% loss. So 70% of in your example 50% no 70%. 70% of 3 is 2.1, 2.1%, 2% at least. So we have, I mean, this is subjective, okay? Maybe we never wait till here, we will sell it here, we will come up with our own logic. So my point is stop loss is something which should be big, so that even though we are wrong sometimes, we are not completely wrong. So, but also sometimes this Fibonacci is misleading and the stop losses are really deep. It's not like 5-10%, it is 50-70%. So in that case, it is important that we do have a strict line somewhere, 50%, 30%, 70%, wherever it is. But we will say we're not going to lose our capital more than that number, whichever that number is, right? So that we save ourselves. And I don't believe that we'll be wrong so many times. Okay. Plus, if we see something like this where 61 is been touched 3 times and it's coming down, it's itself a red alarm for us, right? Because we expect it that it make its place till 38. I'll tell you one more thing. Once something crosses 23 and if it goes till 61, it should not come back to 23. It should not even come to 38. It can come, but it should not stay here. So we can even sell at 38. And let's take some example if you want to say some other example. Tell me some example.
You showed one another example, same logic.
Yeah, 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 yeah.
I got that.
Yeah. So Adani Port. Yeah, Adani Port is a good example, but it never fall down so much. Um, hmm, well, there's a use case here. Yes. Mm, okay. I make it a daily chart. Okay. There is a high, there is a low, right? Although this is a very difficult chart to say, but assuming this is the high, this is the low, and then it goes above 23, it goes even above 78, and then it got rejected from 1, so it makes double top, and then it comes down till 0, and then it goes up, and then it goes again, and then it really goes down. So all these things which we are saying here will completely make it difficult for us to manage, just because this chart is not following a trend. This chart is following a range. And when a stock is in a range, we really cannot make any logic out of it. So when something is in a range, we really cannot make money from it. It has to come out of that range, which also add up to the point. Okay, this is a good point, that we should not be so aggressive to find a base, to find a low. If you see here in this chart, okay, we are looking for a base at 38%, right? 38 was really high from this particular Fibonacci points. So there's a possibility that this was never a low. We should look for the low somewhere at 61 or 78. Okay. So what I'm saying is, when we're trying to find a high and a low, we should also see the previous trend so that we get to know how much it has corrected. If it has not corrected so much, then the possibility for us to go in a side range market is higher. Mm, okay, DMART. See here, um, weekly chart. So I don't know which point should I take it, but assume this is the high, this is the low, right? This goes up from 23, it goes till 50, then it comes down till 0, then it again goes up and comes down, then goes up, then it touches 78 and it comes down, right? So this chart is again in a range. You see that? It is in a range, which mean that even though we find a low, we are unable to come or make money out of it because it is not growing. It is stuck in a range even though we bought in a good price here. But still, if you see today, we are almost at the same level where we have bought it. So what we lose 4 years plus infinite opportunities. And maybe if we are desperate, we would also bought it here, never know. So,
I did that mistake.
okay. I mean, if we do not try to understand the whole picture, this is possibly what we will do it also. So,
Yeah, yeah.
so my point here is that at least now we know. So my point here is that we need to come out of a trade somewhere here so that we don't really wait for all the time wise correction, and we'll use the rest leftover money somewhere in a better place.
Yeah, last time you mentioned this one. You check it with the local percentage. If you find some pattern there, see, we know that when we entered, right, maybe around 3,800 something you entered,
Yeah,
and somewhere 4,600 to 4,400,
yeah,
if it is not forming that base and taking
yeah.
towards top, if it's coming back, let's sell it. Let's 20% profit is also fine, right?
That's an approach. So we are saying,
But
yeah,
yeah,
that is one approach, that buying at 23 and selling between 61 to 78. That is one approach. I'm not saying it is right or wrong. It is one approach. What we were looking now is to make something 3 to 5 times, and to do that, we need to find something like CDSL, and then we need to stick.
Correct. We have already added that kind of stocks as well, right? In case if it is not coming in our favor, let's
Yeah.
this wait for it.
Yeah. So what I'm expecting is to be happening like this, and that's why we are putting all the efforts. But if it is not going this way or something similar to this way, then yes, we need to then come out of it. And
One company name which you are in the 20%.
yeah, and that's my point also, that out of 15, 20 or 10, we may not have every company performing the same like we expect. There will be some demand, right? And I don't want to waste my time in these kind of performance. I'm okay to lose 10, 20% or 50% early so that I can focus on other companies. So I don't want to hold it. Maybe what you're saying is right. Um, so now we are talking about two approaches. The problem is how we will know if the stock we're talking about is DMART or is it CDSL. We will only know when it becomes CDSL or become DMART, right? So
Yeah.
uh, um, another
How
approach,
to
another approach. I have one more approach that is more practical. Just tell me if you think, yeah, that require more work. But let's see. You entered at
that
23 and you exit at 61. That's it. You enter at 23, you exit at 61, and if you see it going above 78, then you re-enter.
if it doesn't go to 60,
Uh, I do not know if we are so bad in identifying, because no, I
we have seen another stock, right? Example, DMart only. It didn't go to 68 in the first phase.
yeah, but
It will like this. So still you are holding. Can you put the
yes,
see?
yes,
See, it is coming down, right? Almost 3,400 up to 3,400. It came back from
mm,
3,900
yes,
purchase. So are we holding still?
yes.
There's no stop loss in that case.
No, stop loss is there. As I said, my stop loss is
Okay.
somewhere 50%, but here in this case, yeah, it is the low itself is 20%. So my stop loss should not be 50%. Maybe the way I should say is whatever the low is, that is a better way. Whatever the low is, we're going to put 10% below it. You know, that's it. Whatever the
In right, whatever the low is, if we put 10%, Adani Green, it will
Mhm.
follow our criteria.
Let's see again.
That's what initially I thought,
Um,
but it is
where?
out of range.
How?
You have added around 1,100, right? It
Mm,
went to
61.
and
Yep.
if you wait for this low, you almost lose 60% minus will be there. Okay.
Yes, yes. 60%. True.
So we said that we have to execute stop loss before that, before this low. That's
Yes,
what we did.
yes, yes. In this example, we're losing a lot of money. But in the second approach, which I'm just exploring, is buy at 23 and exit at 61. And you are saying, what about if it do not get to 61%? And I'm saying normally it will. And if not, then we will hit the stop loss, like in this bank, right? So uh, that is another approach. This is not multi-bagger approach, what I'm telling. But if we say we are making something like this, right?
Automation frame.
No, I actually tried the making automation. It doesn't work because there are so many variable around it that this will not work. Somehow
Okay.
the analysis is not subject to.
No, in the Excel, maybe let's brainstorm that area. Maybe once we
We
finish
can,
all this
yeah, yeah,
analysis,
we
right?
can. I think
Put
making
it
making
somewhere.
making Excel is fine. We will come back to this. Making Excel is fine, but First, we need to know what to do. But if you see this example, we bought here and it doesn't went to 61 and it then it falls down. So in this case, 61 is not been breached, and then the stop loss is somewhere 25%. Why 25? Because now I'm telling whatever the low was, from there make 10%. So at 25% loss, we came out in this example. So because sometime this height is too strong. So Adani Green, for Adani Green to make from here to here will cost 60%, but for Indus Bank to come from here to here, it will cost only 20%, 25%. So it is not always fixed. So we can say whatever the low is, because we know we are trading with Fibonacci series. So we are saying whatever the low was on which I entered based on 23%. When the low is breached by 10%, then I will exit.
That's what my point is. But the Adani Green, it was something different.
Yes.
So how to handle Adani kind of
Adani Green, we already handled because it reaches 61%. So you are out. It reaches.
before that itself? Okay, okay.
Yeah.
Different strategy. Adani Green, they should involve different strategy. Okay, fine.
I mean to say we cannot merge these two strategies. We have to stick with only one because, as I said, we never know which will become Adani Green, which will become Indus Bank, or which will become DMart, which will become CDS. We don't know.
Follow market.
Yes. But also we need to have mindset clarity. So what I'm telling now is that either we enter at 0.23 and exit at 0.61, or okay, not or, and re-enter at 0.78, or we enter at 0.23 and book okay, and buy again at 0.78. Okay, in both case stop loss here, um, maybe same logic, minus 10% of low, or minus 50%, whichever is less. I'm just trying to frame what we just talked, and the stop loss also here this same. So we cannot do both because we never know which stock will go directly up and which stock will make us look like idiot, and then we simply make a stop loss, and that hurt more because you actually seen it goes up, but then you're putting your position down, you're losing time, you're losing confidence plus money. So but this require more effort, right? As I said, this is not simply buying and sitting, this is more. But at least we can just say that in our plan, when we buy it here and when we see something happening at 61, at least we can make a decision to hold or sell, you know. I mean, there is something happening between here and here and here. So when we see something falling from 61, maybe we can just sell it. So then we make 10-20%, which is fine because then we know that this is going down, so let it fall down, right?
I need to write a big program.
I know, that's the problem. This is not this is not possible with program. Yeah.
Right forward.
um
That when they will release this algorithmic
I hope.
trading, algo trading, that would be done only, no? It's like
Well, there are many ways to do algo trading anyway, but uh,
it
I,
is.
it doesn't work. I tried. It doesn't work. For example, this one. This is, I think, Corona, right? Yeah. So, yeah. See this example. No, no. See this example and tell me how you will classify choice one or choice two. We bought it, we purchased at 1200, then it goes to 61 and it comes down. Now, when it's coming down, we may believe it is going to go more down, just like Adani Green, and we sell it here and then it goes up. So either we make ourselves clear that we buy here, we sell here, whatever the reason is. If it's going up also, I don't care, just sell it. And then when it goes again at 78, buy it. So by doing so, what you earn 20% here, and you also earn, yeah, if you believe you making an entry in time, then you also earn 20% here. But if you would have holding it properly, then and then you might have make 60%. So it is difficult choice, you know. um
We need to decide which company we have to do. If fundamentals are very strong and like the market is going down, then
yeah,
we need to wait and see, right? At least
yeah,
some.
yeah. If you ask me, I think easier for me, I mean, both approaches are fine, but easier for me is to make a plain stop loss and follow
Same role.
this approach. Yes, I don't want it to complicate with this, because then if you make this logic on something like CDSL, then you will always curse yourself,
Mm.
like what I did for camps, right? I told you, right? I thought I was over smart and I get out of it. But what camps did was, I mean, yeah, I exited somewhere here. Why? I don't know. My point is, you miss all the rally. So let's put it back on camps where we started today, and we'll make it short. I think we will close it now. We buy it here. This is fine. You get a chance, you buy here. And when to sell target, I'm not sure. But at 1.6, if it touches, I wanted to sell 75% of the portfolio. That's the plan. That's my plan. So target 75%.
I maintain just 0.75.
Yeah, when hit 1.6. Uh, but the problem is not everything hit 7.5. 75% of my portfolio, of my total number of stocks.
Ah,
Oh yeah, yeah,
that company.
of that stock. Yeah, yeah, yeah. Each.
What about 25%? What about 25%?
What about 25%? So if we do the same in CDSL, I come out 75% here, but then it goes up like this. So I get an opportunity to say I can sell 2.6 or 3.6, whichever I want to sell. I have a luxury to decide. This is free money.
Okay, okay.
And more or less, big companies. One second. Titan. Yeah, just example. Okay. I don't know how to define these companies. It's too difficult to decide. I mean, I can take any point. Every time it will make you feel idiot. So you feel you will sell here, it will go up from this point. You feel you will sell here, it will again go up. So there's no moment in history when these kind of company do not really make us feel like we don't understand how market works. So I'm saying uh, 1.6 is something which is very generous amount anyway, and let come out of it. And anyway, right? I mean, this is what 1.5 year of journey. We are just saying so my plan is, and I'm telling you, Naveen, my plan is that I'm now not going to look for 5 times in 5 year kind of logic, because I don't know how it will behave in next 5 year. What will happen with the change happening around the world? We do not really know how. I mean, do you know if you will own an electric bike in 2030? Do you know that? If you do not know yet, then how can we say that we can put all the money on electric vehicle for 5 years? We may not, right? There may be something which is completely different. So make money in the way, have a process in mind, so that if out of 15, if something goes wrong, those will get filtered out and something better will get in. And then with time, we are going to complete our process and then we'll stick to the major plan. So for example, you have 1 lakh rupee, start this with 1 lakh rupee, see and practice and decide if it works. We can always make it saying that I'm doing for 5 years. We can always make decision, but we cannot make that happen if we lost all 1 lakh rupee in first 15 say. There's a possibility. We are putting a stop loss, right? If you're putting no stop loss, is fine. But just think about one corona event. Whichever logic you put it, everything got cancelled in that period. So if something like that happen again or something similar happen again, then we will lose almost all stop loss will be hit. So 15 into um yeah, in your example, 15 into 1.5, you will lose about 23% of a portfolio just by stop loss. And that's also not a genuine stop loss, it is just a stop loss, right? So my point here is that let's start slow, let's see if our logic works. um, and for all the stocks that we have identified already, right, which you also have gone through, try to put this on the chart and try to come up with a label. Make a new tab here, and whatever excel you said, right, either you make an excel or you can also put all those points in the word document, because anyway those words, I mean those level will not change as if you know what will be the price you are entering, right? So once you entered or once you find a low of a stock, then the value will not change. We don't need any formula, we just need to find it once and then we put it there. That is good enough for reference purpose. Then we will check it again and again. So that's what I'm trying to do. So step wise, what I'm trying to do here is, first, all the stock that we have identified, I wanted to see on the chart if it works with that logic. Then identifying which method I will stick with. I wanted to stick with this, you know, somewhere like this, where I wanted to not put 100% of my money, even though if I'm right, so that I have a leverage in my holding. If something I got as an unconditional benefits, then I will take it. Uh, and third is, I wanted to stick with a simpler approach than making it too complicated and looking for um, very short term activities, because these things can actually make us more stressed than the actual work is. And in the end, I wanted to stick with 20 stocks because I'm starting, so I need to know how it works. So my stop loss is
Okay.
1% and I'm fine to lose 1%.
Keep some stop loss.
Yeah. Okay. Is it possible, Naveen, that you make a new tab and just summarize what we did? Because in that case, maybe your learning also will increase. Plus, we will also have a base, what you said, right? We can discuss from that point. I'm trying to make all those points, but it will also help us together if we update it.
Up to points.
Whatever you feel is relevant for us to proceed, you can just make those points.
Okay.
Plus, the video is available to you anyway.
Yeah.
Yeah. Okay, then. Chalo. See you next time then. Bye bye.
Yeah. So, bye.